Okay, we've got an interesting week ahead of us for trading. Now, Friday was interesting too. We had a few Fed speakers, including Powell and Bernanke, but it was really about Powell. We had also the debt ceiling making some headlines, the GOP walking out. Both had a slight effect on the markets, gold markets, dollar, etc. Anyway, let's take a look from the top. S&P, that had a bullish close on Thursday. So Friday was a slight retracement. To be honest, still pretty bullish. We had a close above resistance on Thursday, and I said you'll expect some sideways movement, and that's exactly what happened. We just had that's sideways. It's not even a down day, it's just sideways closing above resistance, in my opinion. So still pretty bullish on the S&P. Nasdaq, even more bullish. That's been the case for some time. You can see it's closed above its resistance also on Thursday, and its Wednesday was pretty good. In fact, the whole week was pretty good. Here, sideways closing even more above resistance. So both are still bullish. Obviously, I would never buy the general markets, S&P, Nasdaq, or any of the large caps that fit into it, unless there was a massive flush, which I did with one or two. But I still have to respect the technicals short term. Now, Dow Jones is less bullish. You can see nowhere near closing above its resistance. And for me, the equivalent would be, let's say, 34,750-ish. And here we are, 33,500, not even. Yeah, for me, short-term upside resistance is 33,750. And then downside, I would say really it's probably 33,000, but let's just be sure about it and make it the low of this wick here. So let's say 33,000, whatever, 33,000-ish. So a close below 33,000 for me on the Dow Jones, which I'd see coming. That would indicate, okay, time to go lower. And then obviously the equivalent, whatever that would be on the others. Russell, the Russell, even with the help of the S&P and especially the Nasdaq, it just can't catch a break. Even when it closes above its descending, which to me is the strongest chart pattern to the upside, it still doesn't muster enough strength. So resistance remains 180. Good luck closing above that. And even if you do, you've got so much resistance on the way up. Everyone loves, I'm not going to say shorting the Russell, but everyone loves to point out how weak it is, and me included. To be honest, if we were to start moving down, back testing this descending, even if it did it straight away, it would still probably be the same as this low. So I think you could say, if you think about it in the future, that trend line is now null and void, and it's really been replaced by this. Because by the time we back test it, if it was done in one day, it would be the same. And if it's done in more days, it would be below this trend line, the horizontal. So for that reason, I get rid of it. So yeah, downside support, let's say 172. And then you've got these sort of two ones down here, which are pretty close. So 169 and 167.5, whatever. You can see where they are here. So that for me is resistance and support. I'm still biased favoring the downside in the Russell, as I am all of them actually. It's just the Dow and the Russell in particular pretty weak, and the Russell is the weakest. Now let's go to the banking stocks. A bit like the Russell, can't catch a break. Even the XLF, which is the seniors, this is not that bullish. It's middle of the range. Okay, we went up a little bit, but closed the week pretty much in the middle of the channel. I still believe there's so much downside potential in all the markets, especially the banking stocks. And I think even Yellen on Friday said expect more mergers, which means expect more small/regional banks to go under and therefore have to be bought by bigger boys, which when it's happened in the past, because it's happened once or twice already, has led to the banking stocks, especially the KRE, the smaller ones, going down, and taking the markets with them. So for that reason, and not just that reason fundamentally, but technically, I just think we're going to go lower, even in the XLF. So to the upside, no change. 33.5 resistance. Downside, I still think this little pit stop on the way down, let's call it 31.25-ish, the low of this candle, that's support. Maybe you get a bounce around here, 32-ish, but if we have some meaningful drops straight down here, a little bounce one day, and if there's follow through, then basically the 30 zone on the XLF. On the KBE, I mean, look, this is, we flushed. Now we've had a dead cat bounce because of the other markets, especially the Nasdaq. but didn't really do that well. Didn't even get to close within this channel. It's just popped its head. Resistance definitely did its job, and we had a sideways day, but still minus 1 point. You can see 75-ish%. That's not really sideways. That's more of a down day. And I think if we have any more downside, we're straight away testing the 32 and 31 lows. So for me, I still reckon the banks, I wouldn't touch the banks with a 90-foot pole. The KRE, exactly the same thing. Didn't even get to touch prior support, so failed just before. Also down 1.75%. Exact same fate, I think, awaits. So any move down in the markets, this thing goes straight to 36 and then 34, where it should be decent support. But I think if we're going down there, we have a problem that might be able to justify a move even lower. So for me, I'm not changing my tune. I still think I'm still away from the bullish side in the general markets. I mean, I respect the potential for the S&P and the Nasdaq to go up, and therefore even pull up the Dow and even the Russell. But just zooming out and having more than a 1 week time frame, I'm just bearish all of them without being short. Obviously, I'm trading more the commodity stocks and a few alternative stocks, but I also have positions in Alibaba, Amazon, Zoom, a few others that escape me, but they obviously follow the S&P, the Nasdaq especially. But I have such small positions that I still prefer if they went down, to be honest. But still paying attention to this. Obviously, these markets affect commodities also. Let's check out rates, which definitely affect everything. Probably the most important sector to watch. Now, the 1 year for me, it's the 2 and the 10, which is the most important. But the 1 year has been the best indicator the last couple of weeks, especially this week. So I did say quite a few days ago that, I thought the 1 year would hit 5%. It did. It's closed above it. Now, on Friday, we ventured above, but it was basically a sideways day. It closed flat, but it did venture above 5%. And that's dangerous territory because if it starts to run, and it could take 1, 2, 3 days, it could start to test its old high of 5.3%. And that's where we were before the tumultuous flush because of the banking crisis. And the banking crisis is only worse now, weaker now. The banks are structurally weaker now than they were back then. Plus, everyone knows about it and everyone's aware that it can happen any moment, including Yellen, who mentioned it literally the other day. So for me, the 1 year should have everyone a bit nervous. I'm excited, but same thing. I still think that being around 5% and going higher, indicates any moment now we could have another bank. And even if it's trading lower, we could have a bank crashing because there's a delay. The market is experiencing rate increases from months ago, and the rates have increased significantly since. So anyway, 1 year, definitely bullish. You got this ascending support that's acted quite well. You got these resistance lines that it's starting to close above. There's only one more above. So watch the 5.3% on the 1 year. The others are nowhere near as close to their highs, but still it's the direction. They've closed above the descending, and look what happened as soon as it closed above the descending. Just up days non-stop. Now we had a bit of a sideways day on Friday, but still green. Still ventured above the 4.3% zone. So that's still, if anything, bullish. But I understand that we could have a bit of a sideways, like a bit of a handle being formed, like you could have one of those and then it goes up. So you could have a bit of sideways day or 2 or 3 or 4, and then we go up. But I still think direction is up. This is the 2 year. This is basically what the Fed has to follow. Now the Fed funds rate is higher. I think the 2 year will catch up. And I don't think the Fed can lower rates. In fact, I think that the market is priced in, and everyone thinks this, and probably some of my viewers too, that the Fed will be forced to pause or to even drop rates soon. I don't know about that. I mean, only if there's absolute mayhem in the banking crisis, but I don't know if they really want to venture into high inflation or hyperinflation. So they may be able to just pause and keep rates very high, which means the 2 year has to catch up and go higher. So I still think rates need to go higher. The only reason they would go lower, besides QE, is if there's absolute chaos and everyone buys bonds. But that's only a short-term reaction because I don't think US government bonds are the best bonds to buy. I think alternative foreign market bonds. But yeah, I respect that you can have a flush like we had here. But I think naturally, if there's an average day where there's no chaos circuit breaking -5% drop, I think rates want to rise. And I think that's what this chart is showing. So that's the 2 year. To be honest, the others are the same. 5 year. Okay, it didn't close above the resistance that I've identified, but you could say resistance is there. I think might as well be sure of it and just put the top of this wick here, the highest candle, but same pattern, going up for the same reason. The 10 year, look at that same pattern, closed relatively higher above its resistance. Clearly, I mean, you could say no resistance is here, but again, same sort of pattern. Go on, I'll put that there. Same pattern. So for me, yields are going up in the 30 year, definitely outperforming all the others. It's basically almost at its resistance of 4%. And that is a nice round number that will get the headlines. I've already seen a few people mention the 30. I've been mentioning it for quite a few days, maybe even 2 weeks or something. But that doesn't matter. The point is the direction is up. The direction is up in yields. And that, let's just go back to the 1 year where it's very clear. And I also said, look, we could start to go up. I remember on that day over here, this massive engulfing green candle. I always said yields are the most important thing. When they start to rise, everything could go crazy. That's what happened. And that's what could happen very soon again as we climb back up. And if I look at other yields, let's just look at the European yields. It's the same pattern. Yields are going back up. It's the most important thing. Now, the only thing maybe more important is if the US defaults, but they're not going to do that. They'll come up with some 11th hour deal. And even if they default, they just have to be forced into a balanced budget and they can print the rest, to be honest. So yields going up is the most important thing. Okay, let's look at the dollar, which used to go up with yields. Then it didn't during this period when we had the banking crisis, which was a bit strange, but not absolutely shocking. I mean, sometimes the dollar can go down instead of acting as a safe haven or instead of moving up with yields. But what is it doing now? Well, it had a massive breakout. We've got this triple trend line breakout. We've got the horizontal, that's obvious. We've got this immediate descending. And then we've got this more longer term descending, which look, it intersects 4 times. 1, first time, 2, 3, 4. And for me, when you have 3 trend lines, including a very long-term one or relatively long-term one, that suggests it's not just going to be one day. And that's what's happened so far. I still think we're going to go sideways and go higher. If yields go up, the dollar can go up with them, right? We've got not just the fundamentals of yields going up, we've got the technicals of the DXY breakout. So I think the dollar should go up. Fundamentally, where should it go? Down. I know it's the cleanest shirt out of all of them. It might not be, but it should be one of the standout currencies out there in the world. So it can benefit during a crisis. It should benefit. But I think what I think will happen is I think it will go up a little bit. It'll hit its head, maybe not even hit its head, just sort of, venture up here, go down, and then it depends. It depends what's going on in the world. But I do think we have enough things out there to justify a move higher. The technicals of the DXY, rates going up, other currencies not being as strong, and just generally a bit of chaos in the world. So I think the DXY will go a bit higher. I did think Friday would be a sideways day, sideways down. And again, I do think we'll have basically a move up. We'll have a few candles up, 1 or 2 sideways down, but basically going up. And then we'll probably around here start to go down. And then the question is, do we break out of this even more significant descending, or do we just fade? And then it becomes this sort of, triple top. I don't know. Let's see what it looks like. But point is, I think we are going to go a bit higher. What I don't see happening is just to move back down. I would benefit from this financially if it just goes all the way down straight away, because I've still got a pretty decent holding, like medium-sized holding in my mining stocks. I went in it's a bit silly, but I added near the highs. Normally I would never add as the miners go up, but I did. which means now, as the mines have come down with the DXY going up, my holdings have diminished a little bit. The value's gone down, which means now they're sort of medium instead of being sort of medium high. But anyway, I'll get to that later. The point is, I would benefit if the DXY goes down, but I do think it'll go up. So I've kind of held back from adding on this drop. I added a little bit the other day, but really just mini buys, more like psychological buys for myself. I'll get to the metals. You can tell I can't wait, but I do expect the DXY to go higher with the rates. That's my point. And by the way, I'm not going to go into currencies, but look at the Turkish lira. Jesus Christ, look at this. And that's with Erdogan winning the election. It's not completely guaranteed yet, but they're having an absolute, you've got a few modern currencies, not just Argentina, Lebanon. I was going to say Zimbabwe, but they've just backed their currency with gold finally. Let's see how that works out. But just it's nice to pay attention to some of these. I mean, Turkey is not exactly some third world country. It's all right. He's destroyed the economy with his wars and all that. But I'd call that a second world country, very geostrategically important. So worth paying attention to the Turkish lira. Anyway, to commodities we go. Copper. Yeah, so copper, you can tell this ascending support is holding, which is good to know that my technicals are not just made out of thin air. What's going to happen next? I don't know. I have no idea because it's worth paying attention to the rates, interest rates, and the dollar. I would say interest rates to understand what the dollar is going to do. Ultimately, I think the dollar is having an impact on commodities. And let's see if the market has an impact. Now, I'd expect if the market's going up, which it's been doing, for copper to go up. But copper has not gone up with the markets. It's gone down because the dollar's gone up. So I think the most important element is the dollar. I think the dollar's going to go higher. So therefore, I think ultimately next 3, 4, 5, 6, 7 trading days, we actually go down to this zone here as the dollar goes up. But let's see. And also, I think the markets will go down because they've gone up a lot. And I don't see why copper would go up because the market's going down. I could see maybe why gold, which it has done, but not copper. So if I think the markets are, if anything, going to go lower after they've moved up, and I think the dollar is going to go higher, both equal copper lower. I think that makes sense. And then technically, there, if we really have a flush, then we'll probably go down here. I'm not going to draw that line yet, but that's my take on copper. Natural gas, I need to always delete these. But yeah, I think what I drew is still what I think is going to happen. So natural gas has had a beautiful week. In fact, let's look at the weekly candle. Look at that. It looks beautiful. Yeah, it closed above 2.5. To me, was very important. Significantly above 2.5. Had a bit of a sideways day there. I think we're just going to go and test 3. And I don't see why that can't happen straight away. Could it go back down and retest 2.5? Retest resistance. Does it act as support? Of course it could. That would be healthy, actually. Because if it curls off 3.5, then it says, okay, we're good. No, we're good. 2.5 is support. And then we could pretty much go straight to 3. Or do we just go straight to 3? I don't know, but I am selling. I own NGAS actually. It's a London Stock Exchange ETF, which pretty much follows natural gas with a small bit of erosion. I don't like that. You lose money as you hold ETFs a bit long. So thankfully, I'm actually just under my average. I think it's because of the erosion, but I look to basically sell the equivalent of up here, and it works on different time zones, so it's not ideal. But if gas goes up, I make money, and I'll be selling just under 3. And then if we come back down, or if we go, I think we're going to go up. Basically, I think we're going to go up, and then I'll be selling into that move. And I also own Trillion Energy, TRLEF, wonderful gas stock based in the Black Sea off Turkey. And that's where I really hope to make my money off gas. So this is more like a little extra. But yeah, that's what I think is going to happen to gas. I'm not going to cover the support zones because I don't think it's going to happen. I think first you've got this support zone. And if we go lower, then, well, it's not going to go all the way down here in one go, but that's the ultimate support. And if it goes some crazy reason all the way down, then good. I've only got 2 out of my 5 buys. I'll have to delete all this later, but that's natural gas. Oil is just going sideways, and I can make a case for it going back down here. And if it goes back down here, watch out, we could flush, and that would be a fantastic opportunity for buyers to buy the dip. I really believe that. I think the ascending support will hold. So even if we go lower, you should find some buying. There should be another wick candle. If we go higher, obvious resistance just under 80, just above 80, let's say 83-ish. So very clear buy and sell zones. And at the moment it's sideways. So it's like, place your bets. I don't know which way it should favor. I think the markets, if the markets go down, oil tends to go down, but it doesn't necessarily go up with the markets all the time. I think it might even go lower. If I had to bet, I actually bet it might go lower. And if we do go lower, we're looking at triple bottoms, lower highs, may even flush. Or you could have a fake flush. But yeah, it could go back down here. And I don't really own any oil stocks except for Prospera Energy, which doesn't really follow the oil market like Exxon, Chevron, and all these. But if we start to flush, I'll start looking at oil stocks, probably large caps, for a quick swing trade. So anyway, clear support and resistance lines. Let's look at uranium. This one broke out of its mini pennant here, did a back test, and now don't know. Not sure. Will it go down with the markets? I've seen uranium move down with the markets. What about the effect of the dollar? Probably not too much. I do expect the dollar to go up. That can only mean uranium lower if it does really have an effect. I don't know. You got to zoom out, see where you are. You're in a back test of a mini pennant of a greater strategic pennant. And if we start to move down here, it really, I've said this 2 or 3 times before when it visits this area, but I just hope it flushes. But I think we're several weeks away from an absolute decisive, defined breakout or breakdown. Something's going to give way here. This is getting tighter and tighter. And who knows? It could be, I think it takes just 1 or 2 weeks for the decision to be made. If you just have all of a sudden a close next week down here at 19 and then the week after below 18, that's it. It's done. Whereas if you start to close above, let's say 22, then it's done on the upside. I don't know. I'm just going to watch it. I know which uranium stock I'm going to buy first, and then the other 2 or 3. Yeah, so keep an eye on uranium. A bit like oil, and I was going to say a bit like natural gas, but natural gas, I think, has done its breakout. I think it's gone up. Oil, I think it's going to go down, and uranium, I really don't know. It definitely fundamentally long-term deserves to go up. So if I had to choose, I would say up. Although I hate to say that because I haven't bought any. Okay, gold and silver. Yeah, gold had a nice bounce yesterday. To be honest, it bounced off one of the zones I'd identified, 1950-ish. So nice move up. That's with the dollar retracing a bit. That's with the debt ceiling, breaking news that came out. I think thing is I was watching CNBC off some stream, and I was watching Bernanke and Powell talk, and there was a slight delay when I was watching it. There's probably 30 seconds off. I didn't know if it was something they said or if it was the breaking news of the GOP abruptly walking out on the debt ceiling talks. I think it was the GOP walking out that sent gold and silver you see this squeeze. It must have been the GOP news. But at the time I wasn't too sure, but it doesn't matter. News is news. But that coinciding with the dollar going down meant gold had a nice pop. The miners popped with it, but then the market started to go down and the miners went down with the markets whilst gold sort of held. So I could see how the miners were, and this wasn't happening a few weeks ago or even a few days ago, the miners were following the markets a little bit, whereas before they were always just following gold. And if anything, if the market went down, the miners went up. So we've got a bit of a disconnect from the previous, let's say, momentum. So that's worth paying attention to, and I think the markets will go down. If the markets start to go down, for whatever reason, Do the miners follow the markets? Do they follow gold, or do they follow both, regardless of the direction they take? So that's what I'll be paying a close attention to, almost on a 1 minute candle time frame. But anyway, we had gold bouncing, retesting prior resistance, although for me, resistance is 1970 to 1980-ish. You can see, I don't want to add too many lines, but this general area here, you can see why I say 1982. I just wanted 1970 to be clear if we close below it that we're in a mini downtrend, which we are. But anyway, we bounce, we retested support, we close, I would say, just below support. Maybe I should just put 1975 so I have a rough area of plus minus $5. But we just retested prior support, and it's, for me, so far acting as resistance. So let's see what happens. Can we reclaim this zone and start to trade above the 1980s and maybe even test 2000? Let's see. But, decent day for gold. I'm still keeping my eye on this ascending line. I know a lot of people now have all of a sudden turned bearish, and we're going to go all the way back down to 1800s or something. First, let's see if we close below the ascending. For me, the ascending is the most important thing. We haven't even visited it yet. And to be honest, Friday was a good day for gold. But look, let's be honest, they're going to extend the debt ceiling, as they've done dozens of times. And when they do, that's probably bad for gold. Although, if you think about it, fundamentally, it's good. It means there'll be more debt, which is good for gold. There are deficits and all this money printing stuff. So it's actually going to be good for gold. But I think the instant market reaction would be, oh no, the fear is over. They're extending the debt ceiling. So sell gold, buy the market. So maybe this is just a dead cat bounce. And once we find out they've extended, we go back down again. But then the question is, back to, do we hold ascending support? Do we hold, or do we close below it? So that's what I'll be keeping my eye on for gold. For silver, okay, it went up with gold for the same reason. For me, it was very hard to call, and I still can't really be sure of where support is besides the ascending. That'll never be tested, I reckon. Never say never, but I doubt we're going to have silver go all the way back down here. That's like a 10% drop. I don't see that happening. I see, resist support probably 22.5, or every 50-cent increments. Definitely every $1 increment should be support. But I'm just going to judge silver's support on gold support. So when I see gold holding support, then I expect to just look at silver and see the same thing happening. Resistance be a bit different. For me, resistance clearly 24.5. I don't care what gold's doing. They'll probably correlate to some degree, but if gold's going up, if I was to look at silver, I'd say, okay, when it hits 24.5, that's going to be resistance for silver. If it goes above it for whatever the reason is, whatever gold's doing, then I'm going to be looking at 25.5, 26. So to put it another way, I'm not identifying support for silver besides the ascending, but I am identifying resistance for silver based on the charts. Okay, miners, look at that little gap fill and then close right back down. Yeah, like I said, the miners, look, they were down less than the metals. When you have silver up 1.5%, you should have the miners up at least 2.5, 3% or something like that. Instead, they were up less than 1%. So definitely underperformed. Not a good sign for the general equities, obviously, but for the general sector. Like I said, they were following the markets. This is debt ceiling related. That suggests if they don't extend the debt ceiling, which is not going to happen, they will. But if they weren't to do it, miners would go down, which doesn't make sense fundamentally. But well, actually, I'm not sure. I can't say that because gold and silver would be one of the only assets to go up, and therefore the miners will probably have a fantastic ride. And that's also Bloomberg that asked that question: what asset would you buy? And everyone, the grand majority, said gold and silver. So I take that back. But the point is, miners underperformed. Resistance, I think you could expect some pretty strong resistance if we do visit, let's say 33 for the GDX. For the GDXJ, it will be, whatever it is, 39-ish. So I'm sticking with my trend lines. I don't see any point in changing that. If we go lower, this is the trend line I've identified, 31 for GDX. If we go lower than that, to be honest, the ascending will come in before any other horizontal line comes in. such as this one here. So for me, the trend lines, the two trend lines I've got on GDX on the way down, 31, and then the ascending by the time it hits that, let's say 29.5 or something. Depends how long it's taking to go sideways down. GDXJ on the way down, 37. If we go lower, depends again what time, how long it takes, but probably 35 point, let's say 36, maybe 35.5. On the upside, you know, that resistance, let's see. But what we need is a close, just to look at the GDXJ, to get back bullish. Obviously, we need gold and silver to do their thing, but we need a close above 39 on GDXJ. And on GDX, we need to close above 33. Then we can say, okay, let's see how high we can get now. And obviously, you'd need gold and silver to do their thing. The dollar and rates, there are all these things I always mention. So you need to pay attention to 3, 4, 5 sectors. But yeah, let's see. And I will not finish with Bitcoin. Anyway, that will do for now. I want to do a portfolio video right after this. But usually I do it the next day. So I hope this was useful. Yeah, have a good weekend otherwise.